When people talk about wealth creation, they often think of technology, real estate, or stocks. But the truth is, one of the most reliable engines of wealth throughout human history has always been agriculture. Long before cryptocurrencies or stock markets existed, the most valuable thing anyone could own was fertile land, the kind that produced food. And even in 2025, that hasn't changed. What has changed is how we invest in it. Investing in agriculture today isn't just about owning a farm or planting crops. It's about understanding a global system that feeds 8 billion people, adapts to climate shifts, and increasingly relies on technology, automation, and sustainability. Agriculture has become a hybrid of tradition and innovation, and investors who understand both sides are the ones who win. Let's start with the foundation: why agriculture still matters. At its core, agriculture represents the most fundamental form of demand for food. People can live without luxury, but never without sustenance. As the global population continues to grow, food demand rises steadily year after year, while arable land becomes more limited. That imbalance, growing demand and shrinking supply, creates opportunity. In economic terms, agriculture is a natural hedge against inflation. When prices rise, so do food costs. And if you're positioned on the production side of that equation, you benefit. But not all agricultural investments are created equal. There are several paths to invest, each with its own risks, rewards, and level of involvement. The most direct approach is farmland ownership. Buying farmland gives you a tangible, appreciating asset that can generate annual income through leases or crop sales. Unlike urban real estate, farmland doesn't depreciate with trends, it gains value through scarcity. However, it requires long-term vision and patience. Returns don't come overnight, but they compound steadily. Historically, farmland in the U.S. and Australia has delivered returns comparable to, and sometimes exceeding, stock markets, with lower volatility. For investors who want exposure without direct management, farmland funds or rights real estate investment trusts offer a more accessible option. These pooled investment vehicles acquire and manage farmland on behalf of investors, distributing profits from rent and appreciation. Platforms like AgriTrader, Farm Together, and Rural Funds Group have democratized access, allowing individuals to invest in farmland without owning entire acres themselves. Then there's agri-tech, a fast-growing field at the intersection of technology and food production. Think of precision agriculture, vertical farming, drone monitoring, and AI-driven irrigation systems. Agri-tech companies are reimagining how we grow and distribute food, making agriculture smarter, more efficient, and more sustainable. For investors, this sector behaves much like early-stage tech: high growth potential, higher volatility, but massive upside if you choose the right players. Climate change has also reshaped the agricultural landscape. Water scarcity, temperature fluctuations, and unpredictable weather patterns mean that sustainability isn't just ethical. It's profitable. Companies developing drought-resistant seeds, soil monitoring systems, and carbon-efficient production methods are rapidly attracting institutional capital. In fact, environmental sustainability has become a key investment criterion, with green agriculture funds drawing billions in global inflows. But there's also a quieter side of agricultural investment: commodities. These are the backbone of the global food economy: wheat, corn, soybeans, sugar, coffee, and livestock. Trading agricultural commodities gives investors exposure to food markets without physical ownership of land. However, it's a volatile arena influenced by weather patterns, geopolitical events, and trade policies. Experienced investors often use futures contracts or ETFs like the Invesco DB Agriculture Fund DBA to manage exposure while balancing risk. Now, let's bring it closer to home in developing regions. In Africa, Southeast Asia, and parts of Latin America, agriculture isn't just a business, it's a transformation engine. Governments and global institutions are pushing for modernization, offering incentives for mechanization, irrigation, and value chain expansion. Smart investors recognize these regions as frontier opportunities where infrastructure investment and rising population create the perfect storm for long-term agricultural growth. Still, agricultural investment demands patience and perspective. It's not about chasing short-term gains, it's about stability and compounding. Farmland doesn't crash overnight, crops don't vanish with market trends, and food will always have a buyer. In a world of digital speculation, agriculture remains one of the last bastions of real value of something tangible, productive, and enduring. But agriculture also teaches humility. Nature doesn't obey spreadsheets. Droughts, floods, pests, they can shift entire markets in a season. That's why smart agricultural investors always diversify across regions, crops, and even investment vehicles. They balance the direct ownership of assets with exposure to tech innovation and financial instruments. Let's talk about the new generation of agricultural investors, the ones combining profit with purpose. These investors aren't just buying farmland. They're funding climate resilience, supporting local communities, and promoting sustainable practices. They understand that modern agriculture is no longer just about yield, it's about long-term viability. Regenerative agriculture, which focuses on soil health, carbon capture, and biodiversity, has emerged as one of the most promising models for future growth. It's not charity, it's strategy. Healthy soil produces better returns financially and ecologically. Now imagine pairing agriculture with technology and finance. That's where exponential potential lies. Data-driven irrigation systems reduce waste, blockchain ensures supply chain transparency, and AI forecasting helps farmers predict yields with precision. In essence, the future of agriculture is digital. And those who recognize that shift will lead the next wave of wealth creation. But here is an often overlooked truth: agriculture isn't just for institutional investors or billion-dollar funds. Even small investors can gain exposure through micro-investing platforms, agriculture-focused ETFs, or by supporting local farm cooperatives. You don't need to own 1,000 acres to benefit from this sector. You need knowledge, consistency, and time, of course. No investment is without risk. Agricultural returns can fluctuate with climate conditions, political policies, and global supply chains. However, unlike speculative assets, agriculture produces something tangible: food, fiber, and fuel, which cushions it against total collapse. In a diversified portfolio, agriculture plays the role of a stabilizer, grounding your investments in the real economy. So, what's the mindset of a successful agricultural investor? It's patience, purpose, and adaptability. The same traits that built empires centuries ago now drive wealth in modern portfolios. Agriculture rewards those who think in seasons, not seconds. As global populations rise, arable land declines, and sustainability becomes non-negotiable, the question isn't whether agriculture will be profitable. It's who will position themselves to benefit from it. You can choose to watch the cycle, or you can choose to be part of it. And as always, remember, this is not financial advice. Agricultural investments, like all investments, carry risk. Do your due diligence, consult licensed advisors, and diversify responsibly. The goal isn't just to grow capital, it's to grow something meaningful, something that feeds both people and portfolios for generations to come. Agriculture is in the past, it's the foundation of the future, and those who invest in that foundation today are planting the seeds of tomorrow's wealth.